Good afternoon, everybody. Welcome to TraderMerlin for your Wednesday edition. Hump Day. Happy Hump Day, y'all. Before I get started with our guest today, a couple pieces of housekeeping. Multiple people noticed this yesterday, and I'm surprised that I slacked that much and let this one go. Yesterday, we talked about BYON, which was Beyond Inc., which, of course, is this conglomerate of financials and Bed Bath & Beyond and Overstock, and I called it Beyond Meats, which has a very similar symbol. As you can see here, this is BYON, which looks like garbage. That's what we looked at yesterday, and I was like, well, I actually don't mind this down around the $14 mark. And then there's BYND, which is another one that has been just suffering lately down at $8. So I got those confused yesterday. Not confused. Well, yeah, I got them confused yesterday. I wanted to clarify that. And also give a shout out to Ed up in San Jose. Ed gave a nice donation, although Ed didn't give a donation. He gave a very nice contribution, but it was a wager, and I still don't know what we wagered, but apparently I won the wager. So Ed, when you feel so inclined, let me know what wager I won there that caused that wonderful contribution. So thank you very much for that, and for all of you who've contributed over the years. All right. Marcus has never put fake meat in my body. Well, you have, it's all soybeans and that type of stuff, but you do have now 3D printed steaks. Maybe we'll do a show on that down the road, but let's get to our time-saving commitment here, which is going to be talking about Warren Buffett. As you guys know, Warren Buffett had a meeting in Omaha, Nebraska last weekend, and there was a lot of interesting things that were said, which I believe are important for all of us going forward, and has to do with Buffett's cash buffet. Joining me from the Midwest himself, he just wanted to move closer to Omaha. We have Dr. Larry Jacobson joining us. Dr. Larry, how you doing, buddy?
Good, Merlin. Good to be back on the show. You know, I think we kind of have it now that we do it 3 times a year. I come out right after the Berkshire Hathaway meeting. We always do an election show, so I'm looking forward to that together. And then use year-end wrap-up or beginning of a new year. So good to be back.
We need to add it. It's got to be quarterly. We need one more. Find a way to squeeze one more in here, and we'll get you in for a quarterly review.
Love it. Let's do it.
Let's do it. All right. Let's start with the fun. Obviously, you're not a person that gets starstruck, but he has a secret love affair for Mr. Warren Buffett. It's embarrassing. I hate to say it, but he's got pictures of him, and he's got pictures with him. It's okay. It's good to idolize somebody of his caliber. You follow the meetings every time they go on. You're always very interested to see what goes on. You're like Bill Addis is with the Fed, right? He's listening for every single word they say. Ooh, this word was slightly different. I mean, you're even looking for Coke cans on the podium. Tell me what you noticed, what your big takeaways were from the Oracle of Omaha.
Well, a couple of things. Number one, it was the 60th meeting. I mean, this is kind of impressive. He's been doing this now for 60 years, annual meetings that started off in like this lunch room when he first started all these years ago back in 65. The other thing was it was the first time he's ever done a meeting when Charlie Munger wasn't even alive. For me, I realized, wow, it's been 25 years since I went to my first meeting when I was a wee lad in my early 30s. But I was saying to you, it was very interesting with this meeting was, number one, every year there's always a can of Coke somewhere to be found because he loves cherry Coke. Mm-hmm. This year, there was no Coke cans at all on the table. They were displaying See's candy. And the staggering number of tons of candy that they actually brought to this meeting was phenomenal. It was like tons of See's candy was sold. The other thing was that you could see that it's starting to feel that the succession plan has already happened. You know, he announced it back in 2021. He's talking more, but he's not running the day-to-day, and I can share more about that a little bit later. But he's definitely in succession. Mm-hmm. But what's pretty fascinating to me is here he is at 93 years old, and Munger was 99, and they were still both sharp mentally. That's pretty impressive.
I wouldn't know if I would call Munger sharp. I mean, he was on the verge of being psychotic and sharp. There's a fine line between those two. When he said publicly, Bitcoin is like trading freshly harvested baby brains, I knew he was off his rocker. Come on. Who makes that analogy?
It's funny you say that, but if you actually, they've never done this before, by the way. One of the secrets they do at the shareholder meeting is they do an intro video where they show it to the shareholders. It's about a whole lot of fun, different skits and things they put on. But this year, CNBC streamed it. And for the first time ever, you could actually see the video that only shareholders could see. And of course, it focused a lot on Charlie Munger. But you'll be surprised. You should watch it, Merlin. This is not the only time he's made a statement like that through his career. And see the uncomfortability with Buffett just a couple of times shaking his head. It's pretty funny.
Yeah. Let me ask you a question. So I've gotten this one a few times from viewers. We had a pretty big open discussion, and I'll truncate it now just to get your take on it. But multiple people have asked about the succession of Berkshire Hathaway and, what's going to happen when he leaves. And my hypothesis is this. He's not, and of course the shareholder meeting kind of clarified a little bit, but he's not doing day-to-day operations. He's not doing all these big meetings. He's still the face of the company, but he came in there with Charlie Munger and established a formula. Here's what we're looking for. Plug in these numbers. If this is the output, okay, we'll buy it. And don't do anything unless that's the output of these calculations. And they have teams of hundreds, if not 1,000 people working on those formulas, and they literally bring it to a team who says, yes, this looks good, and he might have the final sign-off, but he's not the one making the day-to-day decision. So if he were to die today, the next person in line just says, I know what the formula is. I'm just going to follow that. So there shouldn't be any major disruption to Berkshire Hathaway. Would that be a safe assessment as what's going on there succession-wise?
That's very accurate. In fact, that was stated during the actual meetings. In 2021, he pretty much handed over the reins to Greg Abel and Ajit, Ajit. So it's pretty broken up. I mean, basically, even though Greg is vice chairman right now, he runs all the day-to-day. Even Buffett said, look, maybe 40 years ago, I'd be a lot more mobile into this. Greg does all the conversations with the managers. I mean, Buffett rarely speaks to the managers of the company anymore. Ajit is completely handling the insurance side of the business. So he is very comfortable right now. And Greg even said during the meeting, Greg Abel, the future Warren, said, look, we intend, Charlie and Warren set the entire formula, like you said. We are 100% going to follow it, whether we're going to invest 1% or 100% in a company. It's a formula that worked. And if you think about it, between the two brains, and Buffett even equated it and said publicly that Charlie Munger was the architect of Berkshire Hathaway. Right. He associated himself as saying, I'm the beaver or the carpenter who got it done. But Charlie was the one that really designed how Berkshire Hathaway works today. And I've seen a couple of interviews where Charlie Munger's actually come out and said publicly that, look, if we didn't have these 2 or 3 really killer trades, we'd be average. But he said, when we found something that fit our model, that worked the way it was supposed to, he said, knock off this diversification, load up the truck, back it up, and go very wide. And then you got Buffett, who's one of his biggest fan, or biggest mentors, was Ted Williams, the Boston Red Sox baseball player. He loved the whole idea that Ted Williams statistically measured each square of the batter's box and said, if you took a swing when a pitch was put into this area of the batter's box, this would be your batting average. So these guys have always been methodical, but you're right. Warren is not in the day-to-day anymore, though he did take 100% fault for something that we can talk about later. Yeah. But it still passes by him, but he's not in the total day-to-day anymore. He said he just can't. He doesn't have the energy to do that kind of stuff.
He's 93 anymore. Years old, dude. Like, stop. Just go do something. Although I this sounds horrible, but I bet if he stopped working for Berkshire Hathaway, the end for him would probably come pretty quickly. I think that just kind of keeps him going to be there and be a part of it. But yeah, he's not doing the day-to-day operations.
Let me tell you what's similar to that. Paul McCartney. If Paul McCartney stops touring, he's going to die.
Same with Mick Jagger.
They do. They grab their energy off of interacting with the people. They love what they do. They don't stress that much anymore. They're getting to live their life the way they want to. And I think they like the adulation. And they both, and all three of them have earned it. But yeah, I think you're exactly right that he would deteriorate a lot faster, but you could see him slowing down a little more in his mannerisms and just how he speaks. And he's definitely turning the microphone over more to Greg and Ajit. It's part of these meetings.
So another thing here that I noticed is I saw people like complaining about the actual earnings themselves. And I'll bring up a chart here so you guys can see the numbers. I don't know what people are complaining about. They were expected to make $4.47 per share. They came out at $5.20 per share. So that's a good beat by any measure, 72-cent beat on it. Kind of surprising me that people are complaining about it. There is one big thing that changed. And I will read some quotes here, and Larry and I will talk at length about this one, which is the graphic for today. Buffett's cash buffet. And I've got this grumpy curmudgeon of an old, looking Warren Buffett. Thank you, Mid-Journey, for that wonderful graphic. Here are two quotes that Buffett made, which I think are very interesting. And number one was, about the cash. Of course, he was being grilled. They've gone from $130 billion in cash and cash equivalents last year, that includes cash and treasuries, to $189 billion this year, which means they've increased $59 billion in cash. And he said, I don't think anybody sitting at this table has any idea of how to use it effectively, and therefore we don't, he said. We only swing at pitches we like, which was followed up later by, we'd love to spend it, but we won't spend it unless we think we're doing something that has very little risk and can make us a lot of money. So I want to talk about this from two perspectives. Number one, Larry, this is obviously a long-term investment portfolio, but I think that this resonates with everything that you teach at Trading Academy as well, which is risk management. Don't force things. If it doesn't work for you, don't take that shot, right?
Yes. And in fact, it's been said many times, and I've heard Buffett say this over and over again over the years. And in fact, I don't know if this is true, but I've seen it in writing. I've heard people talk about it, that at one point, Jeff Bezos went up to Warren Buffett and said, Warren, I don't get it. Your strategy is so simple. Why doesn't everybody do what you do? And Buffett simply replied, because nobody wants to get rich slowly.
Right.
And it's true. And so think about it. You just even used the word pitch, Ted Williams. Mm-hmm. So Buffett learned early on that, and this is really what he's looking at doing right now. How do I keep operating expenses low? And I want to start, they're buying back shares right now. So that's what they're doing. And yes, he's got an enormous amount of cash. But one of the things he mentioned was, and it was probably about 5 years ago, he started to invest in Japan. And he changed his tune in this meeting and said, look, I don't know the strengths, the weaknesses anymore of non-US economies. If we're going to do anything right now, we're going to do it in the US. And so last time I heard him kind of talk this way was all the way back in the year 2000, when he was adamant they weren't going to invest in China. No way. Him and Charlie we're never going to invest in China. Then he invests in China. He wasn't going to get into technology. Now his biggest holding is Apple. So, he tends to morph when he feels that the opportunities are right and there's an opportunity to do his way of thinking. So at some point, unless there's tangibility more in the crypto world, he's going to, of course, stay away from it. And there's other things he stays away from, but he has admitted his biggest blunder was not getting into Amazon. He said he should have been in Amazon. He missed it.
Well, shoulda, coulda, woulda. No big deal. All right. So the discipline side, obviously, everyone here is working on their discipline. We will always be working on our discipline. The other part to that statement, those two comments that Buffett made, which I think is the biggest piece, was if Warren Buffett, who is great at finding value, he's great at looking at something that's maybe downtrodden and beaten up a little bit and saying, hey, this has long-term prospects. If he's now not only not buying, but he's liquidating his positions and going into cash, that's a concern. If you look at this treasury yields right now, this is from Bloomberg. This is as of right now, all the different treasuries. So you got 3 month, you're going to get 5.39. You got 6 month, 5.36. 12 month, 5.14. The long end of that, you're going to get for a 30-year, 4.64. Right now, they've upped their holdings with regards to treasuries. They're at $153 billion worth of treasuries. I mean, talk about supporting the government. They've got $153 billion worth of treasuries, and that basically tells the majority of the shareholders here, we're going to be content with 5% for a while. Does that concern you?
Not really, because you got to remember that they've morphed. I mean, if you think about it, the two businesses that are not really talked about, and here's some statistics I can share, is that there was actual money that was made in the railroad revenues. They actually reported $25 billion in railroad revenue. Okay. They also made $22 billion in insurance premiums. So this morphed. I mean, you got to remember that there was a tipping point where Warren Buffett went from being an investor to being a holding company. Right. And so this guy doesn't have to do crazy investments anymore because the companies they purchased, and this is really where a lot of people don't understand the true genius of it. And I keep going back to Munger. I know he's not your favorite, but Warren, again, the whole name of his company was one of his dumbest investments, which was Berkshire Hathaway textile company, right? And when Charlie Munger joined the board, he looked at Warren and said, this is just dumb business. And finally looked at Warren and said, here's what you need to do. Stop trying to buy mediocre companies at great values. buy great companies at good values. And that's what changed Buffett's mindset. And they started getting into it. To this day, Charlie Munger said one of his favorite stocks or companies to own was Costco. Loved Costco. So I think what's happening is, one, they're not these companies anymore that are just going to create this kind of value and be able to sustain it the way Warren Buffett used to find. And let's face it, he bought Coca-Cola for something crazy like $5 a share back in the 80s. And the company was just so undervalued, and Coke wasn't going anywhere. So if he's going to buy into something, he's doing so because he believes there's a lot of competitive advantage. He believes that the earnings will stay sustainable, not just the typical 5-10%. He's looking for things that can make 15-20% a year. And there's just not those companies anymore at the valuations that he finds interesting. But I will say, and he also was very careful in how he worded this, he sold, and the statistics was 13% of their Apple shares. Yep. He basically reduced the shares to $135 billion. So Buffett sold a bunch of Apple, which also created this tremendous influx of cash. But he still believes that, in his mind, Apple is a much better company than Coca-Cola and American Express are. And so he has come out and said he thinks probably the best creation invention in all of history was the iPhone. Mm-hmm. That was the thing he prides more than anything else, because it wasn't just utility, but it changed everything. And I think that Warren's just, when you play the game for so long and you keep accumulating cash and his businesses are so strong, where is he going to infuse $189 billion these days?
Yeah. Well, and that's I just did a poll for the viewers out there. If you want to partake in that one, please do. The poll was, if Berkshire Hathaway is hoarding cash, does this make you nervous about the markets going forward? Again, if there was good opportunities out there, if there was things that looked like good value, good long-term prospects, he wouldn't have this kind of cash. So, from my perspective, it does make me a little bit nervous, because someone of his caliber is always going to try to deploy that capital and put it to use. And like he said there about the cash, if we don't see anything worthwhile, we're not going to take those swings. That means that from his perspective, looking out on the scope of all things market related, there's nothing that looks attractive to him. That makes me nervous about the markets going forward. What's your take?
Well, honestly, I think it depends upon, again, remember another tenet of Buffett's, which everybody knows, but nobody follows. Be greedy when others are fearful. Be fearful when others are greedy. When everybody was freaking out in 2020, he was calmly buying. And back in 2009, he funded Goldman Sachs. Mm-hmm. The government asked for a loan. So, you got to remember that he does not think the way, and Charlie and him did not think the way that most people think when it comes to investing in the world. They have a very different way of thinking. And let's face it, it's worked really well if you're patient enough and that's the way you want to go. But Buffett's also come out and said, look, my way of having to evaluate things is very different. If I started out with $1 million, I could be doing a whole lot more than somebody sitting on these billions of dollars right now to make the kind of value that he's looking to achieve in the investments he makes right now. Yeah. But I will say, with the markets, for him to start selling, and he never used to kind of do that on a company he valued very deeply. Like, you've never seen him sell Coca-Cola. There had been some event. When Murphy left ABC, he was out of ABC and Disney. So there has to be something that triggers him wanting to leave. Or, let's face it, he just said, what he claims to be his 100% failure this past year, the Paramount stock, global stock that he bought, 10.1% of the company, and he took a beating from it. And so he said it was mostly due a lot of it to the writer strikes and the actor strikes. But at the end of the day, he's not going to make every single one work. So What I always tell the students, and I believe this wholeheartedly, it doesn't matter how many trades you win, it's how much money you get to keep. Mm-hmm. And Buffett's the best at risk first and reward. So if you follow the way Warren Buffett thinks, but you have to be willing that it's not a casino. You're not going to make money quickly. It's not going to be like, oh, I could have bought Bitcoin at 300. Now it's at 74,000. If you were going to do that, you would have done it like you did, Merlin. Yeah. Otherwise, people always say the three best traders in the world. You know it.
Yep. Shoulda, coulda, woulda. You know, on that, so I got the chart up here of Paramount Global, which just looks absolutely horrendous. And I don't know when he bought into this or when that deal was struck. But if we go back to the peak here in 2021 to where we closed at today, Paramount is down roughly 87%. Now, going back to the style of Buffett, which is I'm looking at all the fundamentals, I'm looking at companies that have strong prospects going forward. If he bought this, let's say back in 2022 or 2021, when this thing had a valuation of $40, $50, $60, $70, $80, maybe even $30, and now it's down at $12, what would have caused him to say, I'm out altogether, I'm dumping for a massive loss, versus I already looked at the fundamentals, this looks good, I'm going to load the boat even more at these lower prices? What would have caused him to jump ship like that?
I think it has to do with the fact that he just miscalculated. You know, there are going to be times, and I go through this sometimes, you know, you and I go through the PTR portfolio. Everything's not a winner. And there's some you look at me and you're like, wow, that really stunk. Here's the thing. Who cares? Yeah. The overall portfolio's up. He's going to make mistakes, but there had to be something that was in the numbers that he believed that intrinsically this company had a potential. But you got to remember, too, there's other things beyond just the actors' strikes. The cable subscriptions and TV profits eroded on him. Mm-hmm. So I think Paramount Plus and all the stuff Paramount was trying to do to compete in that space just bombed. And let's face it, they're one of the cheapest ones, $5.99 to have Paramount Plus, and the only thing you really want to watch right now is Jon Stewart. Right?
Hey man, so, hold on a second. Don't get me started, because I've got an addiction to horrible crime shows. So I'm watching Law and Order, criminal something right now. So I'm getting my $5.99 a month, but I'm going to close that out here as soon as I finish that series, because that chart looks terrible.
Well, it's sad because, you know, all these studios are trying to compete with each other. I think that's all going 20 years past what the record companies went through, and I lived through that. You know that. And they're all trying to have to reimagine themselves, redesign themselves. But the bottom line is, at this point, people aren't going to theaters. It's all streaming. And let's face it, the movie studios are putting out the same garbage. Fall Guy. We didn't get enough of that when Lee Majors did it back in the 80s.
That was a good show. That wasn't a movie, though. That was a TV show. I watched that one.
It was a good show, but it had its time. And if you notice, and it's funny, you know, if I could digress for a moment, I'm starting to go back and watch movies from like the 40s. One's called King's Road, for example. Okay. And it had Ronald Reagan in it, believe it or not. He was a pretty good actor at it, but there was a story. There's no stories anymore.
Well, I heard that they're coming out with a remake of I Dream of Jeannie, and to make it politically correct, it's called I Dream of a Transgender Genie. That's the new movie coming out here. Oh,
well, you know what? At this point, you're looking at all these companies, and I think we're through a lot of different transitions, right? Yeah. Because you know better than anybody else, with all the digital currency out there right now, you can't tell me with 100% certainty which one's going to be the next Amazon and be that king. So you diversify right now. And I think that's the struggle they probably had with that space, is that they can't tangibly figure out in their minds until it gets to the next level, which is probably going to be long past both of them have passed, where there's the tangibility that you keep talking about with a Web 4.0 or whatever, where people are actually creating and it becomes businesses. Right now, people are just speculating on the coins and all the other stuff. Look at NTF. I mean, they're dead. The NFTs. They're gone.
No, they're there, but they fizzled out. And it's funny because I remember in our crypto program, we were saying that from the very beginning, like, these are just a joke. You're going to spend $1 million on a picture of a chimpanzee with a cigar in his mouth? I'm like, well, you're an idiot. Sorry. Let me go back to the Buffett piece here, because I do have this graphic up. I just wanted to show this. This is some of his major holdings, and you can see he's got it was 50% of their holdings was Apple. They've subsequently liquidated part of that position. But, you know, this goes back to what you and I all do as traders, which is, you don't want to have too much of your position in one security. It's too much of a systemic risk to your portfolio. So he's got fairly well diversified holdings here with Moody's and Kraft Heinz, Occidental Petroleum, Chevron, Coke, American Express. Apple's just too much. So I think it's a wise choice to liquidate some of that and go to cash. It was just a little surprising to see how much they had in cash. Now, the result of my survey, which was if Berkshire Hathaway is hoarding cash, does that make you nervous about the markets going forward? 54% said no, 45% said yes. And I guess maybe I should have reworded that, because I'm not necessarily nervous, but if we look at all the different signs of where the markets may be going, if we have high inflation or high unemployment and GDP numbers and those types of metrics, this is just one other piece to that. And yeah, maybe not nervous, but cautious about those markets going forward. If one of the biggest guys out there is saying, I'm going to hold off buying anything, I think that kind of speaks volumes for us as longer term investors as well.
Well, but again, I think it comes down to what he's looking to buy and what makes sense to him. I mean, if you go back to 2008, when everyone was in the fetal position and didn't know what they were doing, he bought Coca-Cola stock at $5 a share. He was sleeping very well at night, even through that crash, but was collecting the dividends along the way. So right now, what has he done? Unless the federal government's going to bail, right, and not pay their obligations, he's up there right now. Now, it might change in the future when we see the interest rates on shorter term, notes starting to go lower. That's what you and Bill were talking about. I mean, right now, why wouldn't he want to be in shorter term U.S. Treasuries making 5 or 6% guaranteed and doing it at different intervals versus putting his money in a market that's clearly been overbought for quite some time, and no one has that crystal ball to know when that market's going to come down. So I think you're right. I think he's looked at it, or the team looked at it and said, you know what, we still love this company. We're holding a very big share of it. They only gave up 13% of it. So it's still their largest investment holding at this point. But the other companies, like you said, talk about Kraft Heinz. Those companies are companies that he owns. He partly owns. Right. It's not even an investment where he's part owner in it. So again, not only does he make money owning shares of stock or whatever, but he owns the company, so he shares in the revenues. So there's a big difference in change. I mean, it finally paid off. I'm sure he's doing very great with General Ray, the reinsurer. But there's, one thing I was sharing with you about that Greg Abel mentioned in the meeting, Berkshire's energy business, Pacific Corp, is in some trouble right now. There's billions of dollars coming in claims from the 2020 Oregon wildfires. He talked about insurance is a very tricky game because, yes, you can make a lot of money with the floats, but with everything going on right now with the temperatures, and they didn't really get into all this global warming. They didn't really talk about all that. They're just saying things are changing. And look at California. California, you can't even get insurance in some parts of California anymore.
That's why I sold my property up north.
Yeah, and I think this is becoming an issue. And if they're going to still be the biggest player in town and they're reinsuring their insurers, then that is going to be a potential problem. But Ajit is like a genius. The guy running their insurance arm, and Buffett's very confident in him. And again, when you're the big player and you've got the government coming to you saying, can I have a loan? Or can you bail out the banks? That to me is like when Jesse Livermore got the phone call from JP Morgan. Hey, can you stop shorting the market? You're going to crash it.
Yeah.
Who gets to that point in their lives, right?
Yeah, absolutely. So a couple of questions coming in here. Ganesh says he still owns Snow and BYD. I don't believe that he owns BYD anymore. He had a small investment in BYD a while back, but I believe he's dumped that one, and I don't see Snow on his holdings right now, so I don't know.
Yeah, he did mention BYD, but it's not, if anything. I think he was getting into that. He was very interested in the technology, but as far as I know, I don't think he's really been pushing that. He didn't speak very much about it.
Yeah. Ganesh asks, what other countries does Buffett look at other than the United States? I don't think he's looking at much, is it? Everything looks like a U.S. company.
Yeah, well, that's what's happening. He even said in the meetings that he's not comfortable anymore with the foreign economics that are going on right now. So he said if they're going to do anything, he's going to try to do something in the U.S., but it's got to be big enough to meet their needs.
You might know this. I don't know if anyone really does other than Buffett, but Margaret asked, how much weight does Buffett put on the management of a team for a potential buy? Like, is he the one that has really any say, or is it literally they just come to him and say, hey, we're looking at this, what do you think? And he'll go, yeah, that looks good, the numbers look good, let's go.
Well, I think they probably sit in a room like anything else. I don't know if it's the same way, but I could jokingly refer to in the days of the music industry when I was in there, some A&R guy would be, pushing for an artist, and everyone would be around the table going, yeah, what are you going to do with it? What are the numbers going to look like? So I think at this point, he's pretty much said, no, Greg is the guy making decisions with the team, and they'll come to him from time to time, but he's not really as active. And he said, he even closed the meeting by saying, hopefully I'll see everybody next year. I'm planning to.
Wow.
Well, but look,
Yeah.
you get to a certain point where there's mortality, and there's a lot of different things going on. But I think that, he's not as engaged in what companies to buy anymore. He might be in the final discussions and people explaining why. But I think Buffett and Munger have done a really good job of training their successors, and they seem to be wanting to follow the same path because it's worked. So it comes down, in my mind, to one of two things. Are people invested in Berkshire because of the company or because of the faces of the company?
Mm-hmm.
And so that's going to be an interesting thing. But one thing he did mention, I did a whole piece on, which was pretty amazing. So I have to presume this woman probably was a very early investor in Berkshire. She wound up donating $1 billion of her shares in Berkshire to the Einstein College of Medicine. And basically went in front of all the students that were there and said, from this point forward, none of you are going to pay tuitions at this college to be a doctor. And Buffett was like, that's why I started this company.
That's cool.
I mean, that's really cool. I mean, think about it. And he said, it's not the only person. There have been several people that have been very philanthropic, and he finds himself buying back shares. And a lot of this is going to more philanthropic needs. But I always wondered if he passed, would a whole bunch of people just sell it? And I would say, maybe not as much anymore because of the fact that this is a very solid company. And I think like anything else, it's like, did everybody sell their Apple shares when Steve Jobs died?
Mm-hmm.
Yep.
Yep.
So interesting kind of way of looking at it. But I'll tell you, if you probably sat with him all the way back in the beginning and saying, one day your shares are going to be $500,000 a share, pretty interesting.
Sign me up. Margaret says, looks like Buffett doesn't like AI. Yeah, he made that very clear. Not that he doesn't like it. He's like, I just don't understand it. I don't understand the damn stuff. And I think that this is the interesting change, though, Larry, is the newer management team coming in underneath him may have difference of opinions on that and use the same evaluations and formulas to analyze those projects. But I know that Munger and Buffett have long been, if we don't know it, we're not buying it, period.
Well, let me tell you what Buffett actually said about AI. He said, and it was not a surprise, it's new technology, but this is exactly what he said. I do think AI has enormous potential for good and enormous potential for harm. Yeah. So again, I think the problem is if this is all a money grab right now, and this is how it all starts with these companies wanting to try to make as much money as they can without necessarily having the safety. I mean, let's look at Boeing right now. I'm not going to comment either way, but allegedly right now, there's a lot of concern about their quality, and the whole fact that at this point that now the Dreamliner is being looked at, and there was a lot of scrutiny about the space capsule they're building, right? I think the same thing's true. So I think that Buffett probably mellowed because I know that he was completely against .com, but at that point it was still a casino. I think that we're still in the infancy of AI, where it's still kind of a casino, and the people who thought they're going to make a lot of money on it already missed the boat. It should have been done 2 or 3 years ago, the same way gold should have been bought 2 or 3 years ago when China and India were buying it.
Thanks, Larry. Thanks for bringing up airlines. I'm flying. I just had to real quickly. I was over there searching for what airlines does Alaska use. I'm flying Boeing tomorrow, so thanks for that one. If I don't make it up to San Francisco, it's been a pleasure working with you, Larry.
Look, you know what? Anything could happen in life. I think the reality is I'm liking that the spotlight's now being shown. And I think that, a lot of people are being paid a lot of money to run companies. And you know what? You can't hide behind the fact that it's a corporation. There are people who still make decisions every single day that impact people's lives. And I think that's been something Buffett's been very, very aware of his whole life. And he's never invested in things that I think he didn't believe in and that Charlie and him felt were just, you heard, it's not a sure thing. And you can't have 100% sure thing, but they get pretty close. And most of their wins have been big, not the ones they just invested in, but what they called their big shots, the American Expresses, the Coca-Colas. Now we're talking about his buy in Apple. He strongly believed in that. Yeah. And I think that makes a big difference. And anyone who's looking to trade, should be doing it because they can understand the business and they see a lot of potential in it. In fact, when you give me the cue, I'm going to show a chart because I think this encapsulates exactly what Buffett and Munger think.
Yeah, one sec. So, we talk about this guy timing things and, buying value and not buying things he doesn't quite understand. For the viewers out there, just curious, when do you think Buffett started buying Apple? When did Buffett buy? Because I remember he was anti. He was like, no, we're not buying Apple. We don't understand the technology, da, da. And then finally he broke down and started accumulating it. What year? What year do you think he started accumulating Apple? People can go back and say, oh, it was back in the 90s. No, not even close. No, not a chance. I'll let them. Do you know? I know it's a trick question. So.
It was, what it's actually, I want to say it was around the split when they had that split of this was, I can't remember if it was 10-1 or 7-1 stock splits, so many splits, but it wasn't actually Buffett. It was the people that Buffett hired that probably said to him and Charlie, this is kind of the real deal. And it would probably to me was around when the iPhone came out, which probably would have been around 2007-ish or a little bit later when they started to see, wow, this product really has tangible use, and I think this is going to be a winner.
It was not. So the iPhone came out in 2007, and if you look across here, just go to the top holdings, it really was 2016 is where I see all of a sudden Apple take a 4% position in his portfolio. That was the December 2016. So, he's definitely late to the party, but if you look at the chart of Apple, let's go AAPL, since 2016, he's done pretty well on his holding of Apple. Back then in 2016, when he says that he bought into it, it was fourth quarter, which means Apple was roughly $26 split adjusted. So, yeah, I think he did fine.
Well, he owns Microsoft because of Bill Gates.
Yeah.
You don't really hear much about it, but I don't even know if he even lists it, but I know that early on, it was Gates who was really starting to educate Buffett on technology because it was not his area, and him and Gates formed a very strong friendship over the years. Mm-hmm.
You always apply the Warren Buffett methodology, and you were on here a while back talking about Texas Roadhouse. Maybe we can look at that one because I brought that up here the other day, and I was like, goodness gracious, Texas Roadhouse is just rocking to the upside. So it's still great. What do you eat there?
Yeah.
Do they have a Texas Roadhouse where you live?
Yeah, I do, actually. It's very big. Can I share my screen?
Yeah, go for it.
Okay, let me do that. Let me know if you can see the chart. I'm going to move myself out of the way. So this is when I started looking at it around the fall of 2003. And if you notice, can you see the chart, Merlin, has come up?
Yep.
It was very flat, like it tried to break out a couple of times in 2023. Then you had that nice pullback. But at this time, based upon how I evaluate the companies, the intrinsic value of, and this is really where it started for me and why I went to Atlanta to learn this, was the Buffett way is all about kind of Ben Graham, but with kind of a little bit more to this, is here was a stock that should have been fundamentally, intrinsically trading at about $200 a share that was trading at $95.30. The last time you and I saw this was NVIDIA. Remember that? Yep. I said this stock should have been trading at $100. It was trading at $39. So right off the bat, you could have bought this stock at a 50% discount of what it was actually supposed to be trading at. The problem is, unless you look for these companies, you know what to look for, you don't get it. And all of a sudden, it starts with, I hear something in the news, or someone starts to talk about it. And people I talk to, no matter who I ask, they love it. They all love going to Texas Roadhouse, whatever reason. It's affordable, it's family-oriented, so people have, it started to come about almost the way I used to hear about Buffalo Wild Wings when they first came out around 2006. That was, I remember tasting it. It's not the same as it was then.
It's and if you want to have horrible service, like you want to be embarrassed at this company for their service, just go to Buffalo Wild Wings in Southern California. I've never seen such horrible service in my life.
But I got that lesson because that stock popped when it first came out. And I think what we're seeing here, and look at the future valuation. Now, I don't have a crystal ball, but if this is true, it potentially should have the ability over time to get up to about $700, and you bought it at $95 a share in the time that I put this into the portfolio. And again, this is educational purposes only, guys. I'm not promoting anything. I'm not telling people to buy, sell, or anything. It's up 72%, and it's made $70 a share. So understanding how to evaluate a company, again, if you're looking for it, you got to be willing to own it for at least 3 years. So far, I'm still in that sweet spot, right? So this is something I'm going to continue to keep looking at least till 2026, but it's going in the right direction. Now, will there be a pullback? Sure. But again, here's what you got to realize. People don't think the fact that if it pulls back and it's a great company, why wouldn't you want to buy it? And that's where I heard the greatest quote ever. Sometimes the stock is broken, not the company.
Yeah.
And that was Benjamin Graham's quote to Buffett. And so when you see a stock that's being sold off or beaten down and it's not really in the news, by the time the analysts start talking about it, by the time it's in the mainstream news, it's too late. So lately, you've been hearing a lot about Texas Roadhouse. Same way. Remember, Merlin, when we first started talking about NVIDIA, and I told Merlin the way I found this, I was reading an article that the chairman of NVIDIA said they wanted to be the premier chip maker of driverless cars. Remember that?
Yep, I do.
And Merlin said to me, "You don't even know what you did." I said, "What?" They became the premier chip maker for gaming. I said, "What?" Then they became the premier chip maker for mining Bitcoin and crypto. Now they're on the leading edge of AI. This is an innovative company, and people kick themselves. It's already split 4-1. Yeah. So that meant those initial shares, when we were looking at it, Merlin, all the way back then, would be about $5 a share in an $800 a share market. That to me is like getting into Bitcoin at $100 a coin way back when. You have to be willing to take those shots, and that's what I think Buffett keeps talking about and Charlie Munger talk about. Are you willing to swing at it when the opportunity is too good not to? Right. And if you are, don't diversify and scale into it. Go all in. Right. And I think, again, coming down to it's not how many trades you win, it's how much you get to keep. Warren Buffett has shown me over the years, I don't consider it necessarily a bromance, but when I find a mentor who's got a set of rules and is willing to follow them, and I'm not going to argue with a guy who's clearly figured this out, guess what? I want to be him.
Yeah. More important. On that kind of topic of your Texas Roadhouse, 771 seems crazy, but how often do you go back and reevaluate that? Because you've got a future valuation, and of course, anything can happen over the next few months. You might see a slowdown. Who knows? They might have an incident at their restaurants, and all of a sudden, all those numbers change. Because clearly, there's a number where Warren Buffett even would say, "All right, I'm going to sell these positions." So, what sort of conditions need to change for you to look at that Texas Roadhouse and go, "Trend's great, but I got to get out of this"?
Well, here's the thing. Number one is I do it annually. I don't need to do it every single month because the numbers are projected on the forecasts they're going to be doing. I'm looking at their quarterly earnings. Are the sales going lower? Obviously, look, let's face it, Merlin, wouldn't you have wanted to have bought Chipotle? Like, I've learned that, and this is just me over the years, why wouldn't you go long on Johnson & Johnson when they had the scare a couple of years back? You basically saw Chipotle after the poisonings, right? That's the best way I could describe it. When somebody say, "Hey, do you look at Chipotle?" I said, "No." Did it poison somebody again? No. But look at the growth on Chipotle. Just look at that chart. And
from its IPO to where we closed at today, which IPO was back in 2006, you're up 7,722%, roughly.
Look at that. And yet they had all this fear that these guys were going to go out, they're divesting from McDonald's. I'm like, you have to realize that when you find a good company and you got to let the people tell you what's good because they're the ones paying, why am I going to argue with them until I find out that people are not liking to go to Texas Roadhouse and they're going to have glitches? Everybody does. Is it truly something that I'm going to look at and say, why not? That's like me saying, well, I could have bought, and this is a great woulda, coulda, shoulda. In 1982, when I had $2,000 in college, if I could have bought the shares of Berkshire for $500 a share, that would have been $2,000, and now they each be worth $500,000. Who's to say why it couldn't get to $500,000? Yeah. So I look at monthly charts. I'm not looking at daily charts, and until I see something compelling, and it's not just the chart telling me it's reversing. Why? Right. Because you've got buyers and sellers in the market all the time, and supply and demand, and you're looking at institutions, and they're not the ones who are the smartest people in the room. We learned that in 2008, didn't we?
Absolutely. And Chipotle's got a similar trajectory that we saw. There's a question here from Shay, says someone just needs to tell me why Wing is at $395 a share. Well, remember, it has a combination of low liquidity, meaning low float. There's not that many shares out there. Number two is Wingstop has been doing really aggressive marketing across the country and opening much more franchises. So that helps that model grow that level. And the chart looks pretty fantastic on that one. It's just mind-boggling.
Yeah, I got to tell you, you get surprised. I went back and looked at something the other day, and it was in the 500s. So I'm like, this? You completely miss them. But that's where you can focus on a certain, if you like a certain sector, like maybe you're into restaurants and all that. It was Peter Lynch all those years ago has said, buy into something that you use every day that people like. Gillette was one of Buffett's favorites early on because everyone needed to shave.
Not everyone. Baby face over here. Electric razor, man. I don't put no blades on my face. You crazy. I tell you what, I look at a razor. Someone pulls out a Bic on like a camping trip and I get all of a sudden a cut from 30 feet away. I don't touch a razor. No way. Real quick, Ganesh asked these two and then we'll wrap this up here. He says, are you still averaging into N-Test, Fortinet, and PayC?
I'm still doing N-Tests, absolutely. PayC, you know what? I didn't pull the trigger on. I'll be honest with you. And I'm pissed I didn't. But this still doesn't mean it's not time. I'm just reevaluating and I'm not liking some of the things it's done and not done. But N-Test is still, I have no problem with N-Test. I think N-Test has actually done pretty well. I know end of year, if you go back to the TraderMerlin we did, I think at the end of last year, N-Test was doing okay. I'd have to go back and look at it. But I don't kind of study this every single day unless I see something really bad happen in the news. I just, you know that, Merlin. I just let it roll. Yep. In fact, you might even be able to look better than I can because I send Merlin an update every single week in Teams. I don't have my Teams open, but you do. You can tell what is Nest Tests up if you have it available to you.
I don't have Teams open up. I don't open it up when I do the show because it just makes every time I get messages, it's just annoying during the show, so I close it out. But
yeah, me too. I don't have it up.
So what else you got cooking, Larry? I know you've moved across the country, so you're no longer out here with us good folks on California. No sunshine and nice weather. But what classes, anything you want to promote and talk about upcoming for you?
Yeah, basically we have a trade plan cast coming up. Really cool is the fact that we kind of separated it. I decided it in April, and it just kind of hit me that this class is really good to break into two pieces. So we now have a 4-hour session on one day and another 4-hour session on the second day. And the way I think about it now is the first day is all about goal setting, and the second day is all about goal execution. So people can now have a choice which one they want to go back and look at. You need both really, but I focus on two completely different separate topics. So we started that, I want to say in April. I just did the May one like a week ago. The next one's actually, I believe, right after Memorial Day. And I'm getting a lot of great feedback from the students. They like it better this way, and it really helps to segregate the concepts better. And then in June, I'm supposed to teach the online options class again, but I've been very involved in just kind of the curriculum and dealing with OTA trade, a lot of new things happening. Just anyone who uses OTA trade, Schwab, we want to talk about that for a minute, Merlin. TD Ameritrade, was bought by Schwab. The big migration happens tomorrow. Ooh. So if you've not gotten your new username and password set up with Schwab and you're on Thinkorswim, you might have some issues coming Monday morning. So we now have actually brought Schwab into OTA trade. So Schwab is now there, and we are doing some testing to bring TradeStation into OTA trade. So a lot of cool things are happening right now. I can't say the when because I don't know. I can tell you we're working on it, but we're constantly trying to innovate OTA trade and make it a really great platform for all of you here at the Trading Academy. And I'm going to continue to keep doing what I'm doing. Of course, the weekly focus class is a lot of fun. And real quickly, I'll just mention, if some of you want to learn a little bit more about the value investing, Bashir Chai does a really great job.
Absolutely.
And he really did a good job of breaking it down. I kind of worked a little bit with him on that class, and he'll teach you how to analyze for stocks and scan for them. And he does a little bit more, not so much long-term like I do, but he does more shorter-term things that might be a great addition to your portfolios.
Nice. No, Larry's not in Chicago. Larry's in Indiana.
I'm in Indiana.
He's in Indiana. He's a Hoosier again.
I'm a Hoosier. Who's there?
Who's there? All right, Larry. Well, hey, thank you very much. Appreciate it. Look forward to your next quarterly appearance. Not every not every 4 months, but every 3 months now. We're back in the program. Happy to have you on. Glad that things are going well and your transition has gone well for you. And Larry is now exercising. He's doing all these exercising routines. How much have you lost already?
20 pounds.
Down 20 pounds. Love it.
And I haven't even gone to Subway once.
Subway would probably be some of the better stuff that you're eating. It's the bags of Doritos you got to get rid of.
No, that's all gone. Yep.
All right, man. Hey, well, thank you very much, and look forward to talking to you soon, my friend. Take care.
Thanks, guys. Bye.
Guys, that was Larry Jacobson. You can find out more information by going to tradingacademy.com. He's got a bunch of classes and materials and sessions. And for anybody who's an OTA graduate, he's always there, Mr. Swiss Army Knife in our community. So glad to have him on the program. All right, let me real quickly run down and get my headphones out of my ears. We'll talk about just our top 7 markets here because I realize I'm not doing an hour show. Even though you want me to, I'm not doing an hour show. So here's what we have cooking for today. Let's scroll up here and go to our broader markets. Bitcoin, I mentioned the struggles. It had that kind of little double shooting star yesterday. Well, we had some follow through coming back down. I don't really see it getting a big boost here in the short term. So I would believe that this is going to continue to drift on down here. Some of your indexes were looking rather weak today as well. We did have that shooting star on the Russell yesterday, which we talked about. You did get that nice follow through to the downside here. I actually had a couple small little trades I made on Shopify today, which actually did really well, even though it gapped down huge. I'll show you that in a second. Gold down 0.08, call it unchanged on the day. This is a perfect spinning top formation. For anybody who wants to know what a true, genuine, perfect spinning top looks like, that's it today on the gold futures. Open and close at the same price and has small topping and bottoming tails, just a sign of taking a breath. Market's just going... Okay, we're taking a breath here. That's all it is. NASDAQ. Here's your NASDAQ 100, which had a little bit of a downside move today on the breaking the lows from that shooting star from yesterday. And, pretty much closed unchanged. So more indecision here on the NASDAQ. Just the way that it traded today makes me feel slightly more bullish than I did yesterday. Your S&P looks same picture, kind of stuck in that overhead range. And I drew this yellow box on there that for some of you, if you took this, there was some short opportunities here, but market turned right back around and finished pretty much unchanged on the day. Your 10-year, nice bullish day today for the 10-year, kind of the opposite of these everything we looked at so far. Yeah, I'll go to NG in just a second. But you had a nice little move up in the 10-year, closing at 4.5%. That was your bronze metal. Silver was the dollar, which had a nice little move today, also of about 0.13%. And then crude oil was your big gainer on the day. What was bugging me is I wanted to buy oil. I was going to buy at the bottom end of this range, and I had an alert set for when crude oil got down to these lower levels, right around $77 was my trigger point. Well, if you follow the futures markets here, everybody, let me bring up a 5-minute. I was fast asleep when this one happened. This was at like 2:30 in the morning. We hit my 60 or 77 mark on the futures and just ripped up. I'm bummed because if that was during regular market hours, I would have done a buy long order, probably on UCO, which is a double leverage long of USO. Unfortunately, totally missed that trade. Really frustrated because I thought this was going to have a nice big bounce here, and it did. Unfortunately, I was asleep. Love that. Shopify. There were two nice setups today. So Shopify, I would just this afternoon just kind of made just a little day trade as we broke out of this consolidation near the tail end of the day, right in here. That was just a small little trade. But my favorite trade for the day, I love scanning through and looking for stuff that's had pretty big down days and been beaten down. So we were running through here, and if you look at the bigger losers out there today, you had TripAdvisor. So TripAdvisor, I was watching this in the open, and it simply broke. I set a line across the high when it broke our 15-minute breakout range, which, let me go 15 minutes here so you can see the 15-minute breakout. Okay, and there you go. And just went long on the break above this high, and as it had this big pullback here around 9 o'clock this morning, took me out. So it was a nice couple little day trade, just tiny ones. This one I liked a lot better from a structure perspective than I did on the Shopify, but using the pain for other people to my gain. Let's go to VB. Wants to know about NG. Let's go to my futures. Should be right here. Where's my natural gas? There is NG. As far as what's going on with natural gas, you said it's making moves, but look at the big picture here. You've had a slight breakout. And again, this huge gap down we had here is concerning. I am bullish on it. I went long Boyle. I am out of my Boyle. I just did Boyle for the trading range here. Told you guys the other day I'd gone long Boyle, and my target was, as it came up back into this overhead supply, right around 15 and change. So I'm out of my Boyle, but I did catch this whole move here, which was great. Good level leverage double for just a couple of days, but I don't want to hold that one long. Does it look like it's based, stabilized, and potentially going to be moving up? I do think so. We talked to John Rowland. He says natural gas, he doesn't see it going anywhere till later in the summer, so we'll have to wait and see. But I'm bullish on natural gas at this point. So let me go to your Forex Factory earnings calendar here, just so you know what's happening on Thursday. Again, there is no show tomorrow. I will be in San Francisco giving a presentation for the Money Show, but we do have a rate statement coming out for the UK tomorrow. That's going to happen at 4 o'clock in the morning. Ooh, that's a nice one. And that will be pretty much the same. Everyone's expecting it to stay right where it's at 5.25%. For the United States, you've got a 30-year bond auction, mortgage delinquencies, and unemployment claims, and that is pretty much it for the U.S. On the earnings front, let me bring up your earnings calendar here real quick, just so you can see the numbers, because there are a couple names that you might recognize on that list for tomorrow. Here you go. So for Thursday, May 9th, you have Cronus, a little cannabis company in there, Dropbox, and that is pretty much it. Oh, there's BYDD. So I want to see what the earnings are for BYD Motors, but that's pretty much it for tomorrow. All right, I managed to get out of here in under 1 hour, so thank you guys. Hope you enjoyed that with Larry. If you have any comments, questions, feedback, things you want me to discuss, put them down below. Any of the YouTube videos, I will certainly get to those on Friday's show, but I will be gone tomorrow. I'll be up in San Francisco, and I may see some of you there. So if you are at the Money Show, swing by and say hi. I think my presentation is 10:30 to 11:15. So thank you so much for joining us today, and I will see you guys on Friday. Take care.